In this podcast episode with Peter Schiff and Raoul, the discussion revolves around the topic of cryptocurrency, specifically Bitcoin, and its role in the current economic landscape. Both guests agree that there is a problem with inflation and the devaluation of fiat currencies due to excessive money printing by governments. They also acknowledge the need for individuals to find safe havens to protect their wealth in such an environment. Raoul presents the argument that the world is facing significant challenges, such as high levels of debt, slowing population growth, and debasement of currency through money printing. He highlights the correlation between asset prices and currency debasement, noting that traditional assets like gold have not performed as well in recent years. Sees cryptocurrencies, particularly Bitcoin, as a potential solution to the current financial system's shortcomings. He praises the blockchain technology for its transparency and security in asset ownership and sees Bitcoin as a digital store of value that has outperformed all other assets historically. He believes that Bitcoin's value is driven by its scarcity, network effects, and the adoption of blockchain technology. Raoul points out that Bitcoin offers unique properties, such as the ability to reuse wasted energy for mining and create new use cases on the blockchain. He sees Bitcoin as a superior investment opportunity with unmatched risk-adjusted returns compared to traditional assets like gold. Highlights the role of adoption and network activity in determining the value of Bitcoin. He sees increasing interest from institutions, governments, and corporations as a positive sign for the cryptocurrency's future. Emphasizes the importance of scalability and stability for Bitcoin to function effectively as a medium of exchange and unit of account. On the other hand, Peter Schiff expresses skepticism towards Bitcoin, labeling it as a speculative mania rather than a viable solution to the inflation problem. He criticizes Bitcoin for lacking intrinsic value and being driven primarily by speculation and gambling behavior. Schiff argues that real assets like gold, real estate, and shares of profitable businesses are better options for preserving wealth in an inflationary environment. He also suggests tokenizing gold on a blockchain as a more stable and valuable alternative to Bitcoin. Schiff acknowledges that he missed the opportunity to invest in Bitcoin early on, but remains steadfast in his skepticism towards the cryptocurrency. The discussion delves into the appeal of Bitcoin and whether its volatility is driving its adoption. Defends Bitcoin's performance as the best-performing asset in history, citing its significant price appreciation over the years. He emphasizes the belief system behind Bitcoin's value and the network effect that sustains its price. Also addresses the ease of storing Bitcoin compared to physical assets like gold, highlighting the convenience of digital ownership. Schiff counters arguments by questioning the practicality of storing nothing compared to tangible assets like gold. He argues that the value of gold lies in its utility in industries like jewelry and technology, making it a more tangible and useful asset than Bitcoin. Schiff also criticizes the creation of Bitcoin ETFs as a way to attract more investors into the cryptocurrency market, warning of potential risks and market manipulation. The conversation touches on the role of blockchain technology in tokenizing assets like gold and creating stablecoins tied to real-world value. Sees the potential for blockchain to revolutionize asset ownership and transfer, making transactions more efficient and secure. He believes that the combination of blockchain technology and digital assets like Bitcoin offers a compelling alternative to traditional financial systems. The conversation shifts to Saylor and MicroStrategy, known for their significant investment in Bitcoin. While Schiff sees MicroStrategy as a Bitcoin proxy and a leveraged bet on the cryptocurrency, acknowledges Saylor's bold move and the potential for building a Bitcoin technology business. The discussion delves into the risks associated with leveraging and the possibility of hubris leading to further risky decisions. Both guests express concerns about the growing national debt and the unsustainable trajectory of the economy. Schiff compares the economy to Wile E. Coyote running off a cliff, with the debt bubble getting bigger and the risk of a sovereign crisis looming. Highlights the significant debt burden and the challenges of servicing the debt, with interest payments potentially surpassing tax collections in the near future. They discuss the implications of continuous debt accumulation and the potential for a debt crisis. Powell argues that the financial system already broke in 2008, leading to a debt jubilee and a reset of government debts to zero. He points out that the system relies on printing money and debasing the currency to pay off debts, resulting in a hidden tax through inflation. While Schiff advocates for defaulting on the debt as the best solution, Powell believes that the current system of currency debasement is a form of wealth taxation that is easier to implement politically. The national debt is a major concern, with the budget deficit claimed to be $2 trillion, but the national debt already growing at $4 trillion a year. The rate at which the debt is increasing is alarming, and during the next recession, it is expected to escalate even further. The issue of potential collapse due to debasement and hyperinflation is raised, with the fear that the monetary system could collapse if not addressed. Powell brings up the potential impact of artificial intelligence and robotics on productivity and population growth. He believes that AI and robots could lead to a dramatic increase in human productivity, driving GDP growth. However, he also raises concerns about the implications of this rapid advancement, questioning what jobs and value humans will provide in a world dominated by AI and robots. Al emphasizes the importance of being open to changing mental models and biases. He shares his personal experience of realizing he had the wrong mental model when it came to investing and the economy. He urges listeners to be open to different perspectives and not get stuck in their own biases, as the world and circumstances can change. Peter Schiff expresses his concerns about the current state of the economy, inflation, and the potential consequences of excessive debt and debasement of the currency. He warns of the dangers of hyperinflation and the impact it could have on society, leading to riots and potentially a totalitarian state. He emphasizes the need to watch the bond market, gold market, and foreign exchange market for signs of trouble. Both Powell and Schiff discuss their fears of worst-case scenarios, such as the complete destruction of the currency, leading to societal unrest and potential totalitarianism. They highlight the potential consequences of a collapse in the value of the dollar, including the loss of savings, retirement funds, and assets. The fear of a breakdown in society and the rise of oppressive governments is a significant concern for both individuals. When asked about the price of Bitcoin in the next 6 months, Schiff predicts a lower price, citing historical patterns and election year trends. In contrast, Powell expects Bitcoin to be significantly higher based on previous election year trends and the Bitcoin halving cycle.